talk about earnings and where we may see a revival, and let's talk about JubilantFoodWorks. Ravi Gupta, CFO at Jubilant, joins us on the show right now. And Ravi, you know, the first number that one looks at when one talks about JubilantFoodWorks, the same-store sales growth. Why is that disappointed this time?
See, same-store growth has been moving in a very narrow range now, from 6.6% high, which we achieved in the Q4 last year, then going to 4.6, 3.2 and 2%. But we need to keep in mind that 6.6% growth that time was on the base of negative 3.2%, and the current 2% which we achieved is in a positive 1.9% last year which we achieved. Now, last year, Q3 was the first quarter where we started trending to positive sales. So we are also actually amazed saying that why the same store growth is not trending upwards. And the core reason when you look at saying that the economic sentiment or the consumer sentiment which is there is not picking up. We had expected, and we have been saying that okay, in 4 quarters the same store growth should be trending upwards to high single digit, double digit. But the protraction which has happened in the consumer sentiment, which is linked to obviously the overall reforms in the country, overall inflation levels which have come down, but the reforms which is getting protracted and it has impact on the consumer sentiment, is it creating a pressure on overall economy? Now we are getting mixed signals now. Some competition is reporting double-digit negative sales. Even the Q3 last year they are negative double-digit sales growth, and this year also they have negative double-digit sales. The positive side is some green shoot visible, like McDonald's reported at least the small single-digit, low single-digit same-store growth. Shopper Stop has a double-digit growth and all that. So we're getting mixed signal right now from the market. So the final conclusion I will say that consumer sentiment is not picked up. It has got protracted. We had estimated that should have kicked in by now, but we are unsure saying that when exactly it will pick up. But we are confident that medium to long term it will pick up definitely, and that is the reason we keep on investing in our business. Our plan is to have about 150 restaurants this year. We already opened 114 for Domino's Pizza and 16 for Dunkin' Donuts. And we are also investing in our commissaries, in our online ordering, in our mobile ordering applications and all that. We are confident that the moment the tide will turn over, the same store growth will definitely go up, and we'll be natural beneficiary of what investments we are putting right now in the systems.
A number that you're targeting for the next quarter?
See, we do not share any numbers specifically in terms of same-store growth, if that is your question. But in terms of number of restaurants, I shared with you saying that we already opened 114 this year, and definitely our target is to have around 150 restaurants, and for Dunkin' Donut about 20 to 22 restaurants. So in terms of same-store growth, given the environment which is there right now, it becomes very, very difficult to predict as to what kind of same-store growth you will achieve next quarter.
You're also factoring in the fact that it could be much worse than what it's currently at also, right? The same-store sales growth. That could be a possibility, you're saying?
We are hoping that no, it should not go worse than what it has gone. But then I think one logical, when you want to say saying that from 6.6 it has come down to 2, can it go further down? Theoretically, yes. But we are confident saying that, okay, there is nothing more negative we have seen. The consumer sentiment is stable. It is not going down at least. But if the consumer sentiment, I think, it starts going downwards, then anything can happen. But we are confident that consumer sentiment is not going downward, at least as of now.
No, so if your same stores are not growing, why are you expanding? I know you're confident that on a 3-year basis, on a 4-year basis, things would look up. But isn't it better to let the consumer sentiment stabilize rather than chasing expansion plans?
See, a while back you were discussing saying that the markets are down, you should buy the stocks with the previous discussion which was going on. See, basically, when the markets are down, if you keep on investing, you will be the natural beneficiaries when the tide turnover. At this point of time, you can get sites because rentals are down. You can get sites at much cheaper valuation, and then these are long-term deals. So you cannot be building a big organization unless until you continuously keep on growing. Your site has to set on the long term, not with the short term saying that right now consumer sentiment is down for 1 or 2 years, you stop and then you start again. Practically working that way will become very, very difficult for a long term, for a company with a long term vision.
Ravi, the other thing is, while I know it's difficult to predict consumer trends, but your stock has commanded a premium because you've managed to show consistent growth much better than, I mean, I'm saying this question because you mentioned that your competitor Yum Foods, for example, you didn't mention the name, but you mentioned that they have had a double-digit same-store sales growth decline. But I mean, you getting that premium because you've exhibited numbers which are much better than that. SSG aside, what about the revenue growth? How do you see that shaping up for FY17 or FY16? Because now I see in reports there are some bit of doubts creeping in with regards to the top line and the bottom line growth for the foreseeable future.
See, our system growth, if you mean saying that, has grown by about 16% YTD for this first 9 months. And typically system growth has 3 components. One is new restaurants which are coming. Second component is restaurants opened last year, which is a full part of the last year impact and full of this year. And the third is the same store growth. All the 3 combined together gives you system growth. So we have a healthy system growth about 16%. Yes, it has come down. Last year it was about 20%. It has come down, and that is the primary reason is the base impact. Because when the base is going up, and you are opening only 150 number of restaurants are not going up, and that's the reason in percentage term looks like as if the same sales growth has come down. The moment this economic sentiment or this tide turns over, maybe that we can look at scenario whether we can open more than 150 restaurants. We have not been opening actually more than 150 restaurants, and this is the 3rd year consistently where we are holding on, saying that we will open only around 150 restaurants. So from the sales perspective, I think 16% growth, system growth, which is there right now, is fairly good. Our desire definitely is higher because of same store growth. It has come down to this level, but we like to have definitely more growth around this.
Ravi, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. All the best for the foreseeable future. You know, it's a very interesting tussle between short-term bulls versus bears, short-term traders, because the Nifty keeps on jostling between this red and the green mark.